right, AutoNation out with strong November sales just a few moments ago. The company reporting that retail sales for new vehicles rose by 16% from a year ago. Our guest host this morning is a man who knows a thing or two about these numbers because it's AutoNation's chairman and CEO, Mike Jackson, who will be with us for the next couple of hours. And Mike, these are strong numbers, 16% overall. When you break it down, it looks like domestic was up 25%, imports were up 15%, and the premium luxury was up 5%. Does that tell us that domestic is really on a tear, or is this a reflection of how weak things were a year ago for them?
Well, first, good morning, everyone. And Joe, my middle name is Joseph, by the way.
And Michael, that's nice.
Yeah,
that's
so
very nice.
Just
MJ.
to get that clear right up front.
Can we call you MJ? Then you'll sound like Spider-Man. Yeah.
MJ's fine.
Yeah,
I don't mind that. Yeah, Becky, the numbers are terrific. For us, we were up 16% in November. And large vehicles are selling very well. Pickup trucks led the way, plus 35%.
Wow.
And again, led by the domestics. And it's just wonderful to see this resurgence of the domestics. I think it's great for the industry. It's great for the country. And they're perceived completely different than they were a few years ago. And the industry overall had also an excellent month. The selling rate was 12,200,000 vehicles. So for the second month in a row, broke through 12 million vehicles. And the retail component within that was also strong, whereas earlier in the year it was all about fleet replacement. We really see the retail component for the industry strengthening. And so I'm optimistic about December, which means my full year forecast of 11,500,000 will be within a few thousand units. And then you take that run rate of 12 million units for the fourth quarter into next year. You can make a fairly certain forecast that next year will be between 12.5 and 13 million units. Now, I'll pin down a final number when I come here in January. Let's get December done. But what it says is a sustainable automotive recovery is underway.
But you just said that pickup trucks were a huge part of that. When you've joined us here in the past, you said that was because small business, housing, contractors were coming back. Is that still the case?
Yeah, it's still the case. We're talking to these entrepreneurial small businesses every day. And their pickup trucks are old and tired, but they think the worst is over. And they all have more forward orders than they did before, and are coming in. And so it's no longer a fashion statement whatsoever or a lifestyle statement. These are the work trucks of America that build the country, and this fleet is being replaced by small business entrepreneurs.
I'd like to use that as a leading indicator. That would be good, but I'm not sure it is. I think maybe they needed, that they were so old they needed to replace a lot of them.
Joe,
right?
you're absolutely right
So
that they are old and need to be replaced. But for the last 2 to 3 years, they've been sitting on that old vehicle and running it as long as they can, saying the situation is so... Like employment, the situation is so uncertain, I can't make this commitment to a new pickup truck. So that means there's much more certainty and confidence in the economy today on Main Street than there was a year ago. Yeah. And I think it's a very positive leading indicator.
For a long time, because people weren't buying new, they were repairing. And we saw the stocks of some of the auto repair companies go to the moon. Is that now a good short?
No. I think there still is a tremendous postponement of purchase. Imagine, we're talking millions upon millions of vehicles that have been stretched out.
And are still on the road.
And are still on the road. Right. Vehicles are now out there for 15 years. The average age of vehicles on the road is approaching 10 years. Imagine we're scrapping 14.5 million units a year, and the replacement rate fell down to 10.
Right.
So this is a multi-year issue that's going to go on, and used vehicle sales are still very strong. At a certain point, though, if we look at used vehicle values relative to new, there's a crossover. So there's like a ceiling on used vehicle values where you come up against new. We're there. So the changeover is going to continue into next year.
We'll look at, since you brought up AutoZone, I mean, there was no recession. There was no financial crisis. There was no, on that stock. I mean, you look at that.
That's why it...
There was nothing. Look at it. You can't even find it. I don't even think you can find it. AZO up at $260.
$260. It's a great company. We have a common shareholder with Eddie Lampert.
Yeah.
And it's definitely a counter-cyclical.
People were fixing their cars at AutoZone rather than...
Absolutely. Absolutely. So they had a very strong... It's an amazing number. So we care for vehicles from age brand new to around 6 or 7. Then we hand off to AutoZone, and they take it from 6 or 7 to 15. And so that segment there is going to be it's very strong for the next several years.
We've got to go. But was there ever, 5 years ago, if you said 12.5 million is what we're going to do, would that have been, that would have been
jump off the building.
Horrifying.
Yeah, jump off the building.
And now you're like thinking, wow, we made...
Yeah, so that's a very good point.
And said that's great, right?
The absolute number is a depression level number
12.5
for our industry. Here's the difference, though, Joe. The Auto Task Force and the companies did a fantastic job of finally slaying the dragon of high fixed cost. So it's a completely new industry, and the fact that the industry now makes money at 12 million units means the journey back from 12 to 15, 16 is all upside. It's all upside. And that's going to unfold over the next couple years.
All right. Well, Mike's going to be with us for the rest of the show. We've got a lot more to talk about what this means for the economy and other new things that are coming along, including the Volt. If you've got any comments or questions, anything you'd like to ask Mike, you can go ahead and email us at squawk@cnbc.com.
People think that this thing worked, and if you look at companies like McDonald's are there financing commercial paper, Harley Davidson. Did you do any, Mike?
Pardon? No,
no, you
not
didn't.
us.
I didn't see AutoNation.
No,
there.
we weren't there.
But they were financing commercial paper. They were small banks. Anyway, everybody and their brother was there. If it was like a whodunit and Agatha Christie, everybody done it.
And what did the Fed bring down its growth to? Because at the time I said they're whistling past the graveyard. Now they're probably about right. 3.5.
3.5. Now they're right. Which, by the way,
doesn't look ridiculous, though, does it?
Now they're whistling Dixie.
Right.
I think what happens to the U.S. economy is important to the entire world, entire global economy. And I think in all that stuff there, most important thing is that people no longer feel their job.
Well, they're getting there. They're getting there. They can still go lower.
That's an important leading indicator.
I agree.
We're hearing it every day that they feel they can make a larger purchase because they're more confident and certain about the outlook.
Right. Interesting. Yeah, yesterday the Dow was up 250. 2 years ago on that day, it was down 680. Ooh. On December 1st, 2008.
There you go.
That shows
come a long way, baby.
September. Want to get some more thoughts this morning from our guest host, Mike Jackson, who joins us here on set, as he does often. We talked about overall industry sales in the last hour, but with the Leaf and the Volt now really making big headlines, I wonder what kind of game changer you think those will be.
Well, this is the real beginning of the sale of electric vehicles. Over the decades, we've had a few false starts because the technology simply wasn't there in a way that could meet the consumer needs. But the technology is there today. With the caveat, though, heavy government subsidies on the development side and a tax credit up to $7,500 per vehicle, without which we wouldn't be having this conversation.
Because they wouldn't be made?
They wouldn't be made.
Yeah.
Because they're simply cost ineffective. If you look at the Volt, which is an absolute technical marvel, it's a masterpiece. For that same size cars, it's probably double the price of what you could get with a conventional internal combustion engine. But to be able to move 40, 50 miles on pure electricity, and if you use it as a commuter vehicle, the equivalent miles per gallon is 93. And with an onboard generator to take care of the range extension concerns, this is going to be a hit in the marketplace.
Really? Define a hit. How much is it going to move?
Well, I think they're going to sell everything they can make. I'm not sure they're covering their variable costs yet. I think it'll be the second generation until they make money. So it's one of those vehicles. I'm not sure how many you want to sell, but I think whatever they produce will sell, and probably be selling 25, 30,000 in the U.S. in a year or two when production ramps up.
Right. And right now it's just a few, right? You've got
it's just a few this year, maybe 10,000 next year. 20, 30,000 the year and after that, but that's really quite something. It's a beginning.
How much does it take when you see that? We just watched the video of you plugging it into their house. What does that do to your electricity bill when you're charging your car on it?
Well, you have to. There's going to be a bill for that.
I mean, but is it comparable to what it would cost at the pump? No. It's probably a third of the price of if you were buying gasoline. So the cost per mile moved in electric mode is probably a third
of what it is with gasoline. But even still, if the technology is $15,000, $20,000 that you have to pay up front, and your gasoline bill is usually $1,500 a year, and you cut it to $500 a year, okay, I'm saving $1,000 a year in cost. That's 20 years to get your money back. Now, most consumers aren't going to do that, but you throw in the investment tax credit and a few other things.
The emotional
component. There are people who are obsessed and fascinated with the idea of being able to move a vehicle without buying petroleum from Venezuela, Mr. Chavez. And they're going to go out and buy this vehicle.
Okay. Mike's going to be with us for the rest of the program. We'll talk more to him about that. But that march towards Jobs Friday continues. Pretty strong growth. I mean, Mike Jackson, you've been saying this all morning long, too, that you are seeing consumers coming back in and feeling a lot stronger about things.
Yeah, there's no question that there's been a shift in confidence. And I wouldn't underestimate the impact of the election. Because effective leadership from Washington in these turbulent economic times was clearly needed, and we were on the wrong track. The focus wasn't on the economy, the focus wasn't on jobs, and the election has squarely put it there. And the American people are more sophisticated and paying more attention than you think. And so I just really have a sense in the last 60 days that we've passed an inflection point where it was really struggling, really wobbling through the summer, and people just have a better feeling about the future.
Jim O'Sullivan, your numbers, though, 3.7%, that's pretty significant. Where's the growth coming from?
Mr. Secretary, this is Mike Jackson. I'm in the auto industry. The Deficit Commission has called for a gasoline tax of 15 cents a gallon. I have long felt that increases in gasoline taxes would give an economic underpinning to sell fuel-efficient technology. And quite frankly, the type of vehicles people buy is very dependent on the price of gasoline. So I would assume you support this increase in gasoline taxes?
Well, I'm not going to comment specifically on the proposals being suggested, but I will say that we have to, well, first, looking at the history of what gasoline has been doing, it has gone up and down by more than a factor of two. It rose over $4 a gallon. It's gone back down. The long-term prospects are that it will be going up, and that, again, is why the Department of Energy is so focused.
Welcome back. We've got a final thought from our guest host, Auto Nation's Mike Jackson. Trying to talk really fast. We don't have
That sounds
much
like
time.
a movie. That sounds like Auto Jackson.
I want to get to this question that a viewer sent in. CJ from Fort Lauderdale said, Mike, over the last 12 months, have you seen a swing in preference among buyers to or from domestic cars versus foreign brands, and what brands had the greatest change for the positive in the last 6 months?
Imagine, that's a great question. There's been a 20-year shift of share from the domestics to the Japanese, and in the last year, that shift has stopped. And if anything, a share is moving back to the domestics. And it took several big events. First, the domestics had to get their house in order around quality and the type of vehicles. That's done. And then I think Ford Motor Company, not taking the government bailout, generated a tremendous amount of goodwill towards Ford, and then GM going public. And then you combine that with what Toyota has gone through around the quality issue, and all of a sudden this 20-year trend stopped. And the domestics position has improved, and they're making money. That's part of it.
Yep.
You know, people don't want to buy a car from a loser, and if you're losing money and you're losing share, it hurts you in the marketplace. People watch that sort of thing. So it is an important moment.
Thanks for coming in.
My pleasure.
Mike
Good to see you
Jackson.
guys this morning.
Auto Jackson.
Yeah, Action Jackson. Make sure you join us tomorrow from D.C. Squawk on the Streets coming up next.